Hi, everyone. Welcome to this episode of Beyond Max Q. I'm your host, Mollie Jahner. I am joined today by Ryan McCreadie. He's the CEO and founder of the Font Capital Partners, which is great. And I think he is doing some really interesting things. And I actually met him through cold outreach, and he said, yes, let's chat. And we started talking, realized there was a lot of things that he knew that he could educate our group on. So all founders, heads up, this is really interesting stuff for those that are in family offices who are, on the funding side. He also has a lot of really cool things that he's doing with you. And so with that, Ryan, please, if you wouldn't just mind telling us a little bit about kind of current state, what you're doing right now.
Absolutely. First off, thank you for the warm introduction. So the Font Capital Partners, we've been around going on about 18 months now. We started the firm in December of 2023, and we're a quantitative investment firm. So really what that means is we use mathematics and trading algorithms to
Mhm.
trade on the financial markets, the public markets, right, on behalf of our clients, which are our family offices. A little nugget. Can't disclose the name, but we are currently in due diligence with a pretty prominent family office for a substantial allocation. That would be a big milestone in our journey to this point.
Congratulations.
Yes, thank you. And so if you'd like, I could talk a little bit about, what's
What
been
does
the
it mean?
experience. Yeah,
Well, I mean,
what's been
what
the
does it
experience of
mean? What
just
does it
building
look
it?
like? Yeah, I would love that. I mean, because for people in the audience that maybe don't know, like, how are you a little different? How are you guys, what are you doing with those funds? What does that look like?
Yeah, well, let me um let me maybe start from the beginning a little bit. I think that'll be
Perfect.
a really
Yeah.
good point, right? So I spent about 12 years on Wall Street in total. Working on equities desk, working on futures desk, working on collateralized mortgage obligations, back when that was a thing, in the late 2009, 2010 range.
Mhm.
And that's kind of really where I cut my teeth. Fast forward to 2017,
Mm.
the last firm I was at, which was Capital One Investing, the writing was on the wall that they were getting ready to sell off their capital markets division. So I
Mhm.
found myself at the time saying, well, great, what do I want to do now? I was a little burnt out, and I said, well, why not go and do a master's program? So I found a private business university down in Argentina, and
What? I didn't know that. Argentina.
packed up, moved to Buenos Aires, and did a master's program where
In Argentina?
uh,
That's
in
amazing.
Ar- in Argentina, yeah, and was days away from moving to Spain before the pandemic. And then the pandemic happened, and I found myself as director of operations for a government contractor that was working on some really cool stuff with
Okay.
artificial intelligence, RPA, and these other pretty advanced technologies for the Defense Logistics Agency.
Hmm.
That contract came to an end in December of 2023. And I wanted to go back. I knew I wanted to go back to the markets, Molly, but I also knew that the markets are moving more systematic, right? There's really kind of two camps when it comes to trading. You have fundamental and you have quantitative. And
Okay.
so really the big difference between those two camps are fundamental are people that are, analysts that are looking at cash flows, they're looking at, management, they're looking at all the fundamentals that make up a business, right? And just
Hmm.
a few examples. Versus quantitative, right? We're building strategies and systems that will
Hmm.
execute based on a predefined rule set, right? Of whatever that is. And so the market's moving more that way. The market's getting faster as technology gets faster. And I wanted to do
Hmm.
something really cool and different. Being a veteran-led firm, I'm a U.S. Navy veteran. Uh,
Yes.
I got my start only because someone gave me an opportunity. And, a lot of folks that are coming out of public schools really don't get a shot. The Ivy Leagues are the ones that usually get most of the recruiting by firms on Wall Street. So
Hmm.
we've actually done a little bit differently. We've made some really good connections with University of Maryland. So
Okay.
we're a team of five today, and I've hired two folks out of University of Maryland's quant finance programs, which is
Mhm.
a little credit to them. They have one of the best quant finance programs in the nation. Um,
Okay.
and our ethos is really all about really all about giving opportunities to those that wouldn't normally have the opportunity to do kind we think that's our one of our competitive edges, right? Is that we're looking for we're looking for talent where most people aren't. And I think that's where, we have a really big advantage from that front.
Well, and you can get different perspectives too, which I think is so important.
Absolutely. Absolutely, right? I think that's huge. And it's a big pool to pull from.
Hmm. Yeah.
And so we spent pretty much all of 24, roughly about 8 months of 2024, building the current trading strategy that we've run today.
Okay.
Yeah, so we spent about 8 months building the system, really stress testing the system.
Hmm.
And today we're now actually working with family office allocators. So we're now moving
That's amazing. Well
stage
done.
to that stage of the business.
Yeah. Well, and
Yes.
that's probably, I mean, so you're on Wall Street, you're deep in all the quantitative finance, you have to sell at some point. What does it look? You were a founder. What does that look like? What does that journey look like for you? Like you're deep in product development. Were you bootstrapping? What does that look like?
Yeah, so we've bootstrapped everything to this point. Um, so we paid for everything out of our own pocket, for the first really 18 months of this journey. We're just now at a stage where we have opened up the firm, the LP, or excuse me, the GP, to take on a little bit of operational capital.
Okay.
But for me as a founder, I think it's really important for other founders to think about this as well. It was
Mm.
really important to me to ensure that we had a product that was good, tested, we beat it up, we know it works
Yeah.
before going and taking investor money. The reason is your reputation is everything. Um, if you go take investor money first and you can't build something or there's no interest,
Yeah.
you run the risk of burning your reputation. So before we went out and started, taking on other people's money, we first should
Hmm.
put our money where our mouth is, which I think it's a huge thing. I think bootstrapping builds a lot of resilience and character. It makes you creative in things you have to do and how to figure it out.
Yeah.
The other important thing is you have to go where your industry is. And I can expand
Yeah.
upon
Can
that
you
a
talk
little
a little
bit.
bit more about that? I think that's important. If you wouldn't mind digging in a little bit.
Absolutely. So, in our case, being in finance and, alternative finance is really what it's called, right? Alternative
Okay.
investments.
I'm new to
The
all this,
major,
so I appreciate you
yeah, no
educating me
worries.
along with maybe everybody else knows what all this is, but just in case, it's good to like get the basics.
Yeah. So when you alternative investments are usually private type of investments. So think about like venture capital, think
Sure.
about private equity, hedge funds, right? These are all what are considered alternative finance, right? It's not your traditional buying and selling of stocks and bonds, okay? Public market stuff. Um, Now, as I was saying, is that it's really important to go where your industry is. So we're based in Washington, D.C., which is fantastic because we're at the seat of where all regulation happens.
Yes.
However, there's not a big alternative finance kind of community or industry here in Washington, D.C. So I actually am in New York 2 to 3 times a month. I travel up to
Wow.
New York 2 or 3 times a month, and that's paid exponential dividends for our growth. I mean, we've realistically grown more in the past 3 to 4 months than the last 6 months before that, right, or 5 months before
Wow.
that. And it's just because being there where industry is, being at events where people understand what you do is also a critical thing, right? And so it doesn't matter what your industry is. I mean, if you're in oil and gas and you're living in, I don't know, Washington State, maybe I'm not for sure, like maybe Texas, maybe moving down to Dallas is a good thing to do, right? Not saying that's feasible for everybody, but my point is if you want to go to where your industry really is, so you can meet the right folks that you need to meet in order to progress.
Yeah, that's really well said. I agree. I think as founders too, that's tough if you're bootstrapping and how do you find the time to go up to New York and you're like, I mean, what does your day look like?
Yeah, great question. I think the big thing first and foremost is you gotta build a team and you gotta have a team that buys into your vision, right? When you're bootstrapping, you don't have a lot of money to pay people. Everyone's pretty much working for sweat equity, right?
Yep.
A few dollars here and there, but it's not a full salary. that's the other key, I think, which is when you're building and you're trying to get something off the ground with other people, you
Hmm.
have to set the expectation up front that you're not an employee, you're an
Yes.
owner, just like this, which means that you also like we're both suffering together, right? Like I think that's the key thing, right? Is I've had experiences where I've, had other other businesses before where I've had partners that wanted to be partners, wanted to be owners, but they wanted to be employees with a steady paycheck. And it's like it doesn't work like that at
Mm-hmm.
first, right? Not until you get stood up are you able to get the steady, the
Right.
steady income from it. And so that's the first big piece of
Uh-huh.
advice and just things I've learned over my career when starting and building businesses is whenever you're starting with partners, I always recommend build a business with a partner because it's already hard enough and doing it by yourself is really
Hmm.
lonely and really hard and you're only one individual. Build with partners, get them to buy in on your vision, but you have to have the tough conversations up front. You
Yeah.
have to set the expectations up front about roles,
Hmm.
responsibilities, equity. Um, and so that avoids a lot of problems downstream.
Yeah.
So that was the first thing, right? So you ask about, okay, how do we do this? So I went out first and foremost, and because I can't code in Python, I have systems, I know high finance, I
Right.
know that I'm not a coder in Python. So what I
Hmm.
did is I said, okay, I looked around and I said, what resources are around me in my area that I could go tap into.
Hmm.
And I got in touch with University of Maryland's Quant Finance program. Universities are a really good resource for people when they're looking for
Yeah.
technical talent, um, because the universities incentivize, they want their students to have real world industry experience.
Right.
And it's good for you as well because you're getting that resource at either
Hmm.
free or a really discounted price.
Hmm.
Um, and so it's kind of a low risk for both folks, but high reward, right?
Yeah.
And so that's what I did. I went out and I engaged with the University of Maryland in their quant finance program, and I hired two of my current founder teammates, not hire, my two current founder teammates today. Um,
Great.
and so we built the trading systems, the trading strategies, along with our other. So we have two other partners. We're a team of five.
Okay.
And I'll get to the last addition. His name is Justin in a second because it was another lesson learned along the way. So on a daily basis, their names are Sharjeel, Harini, and Clark. They handle the execution of the strategy, making sure everything is working appropriately,
Hmm.
managing our actual trading on a daily basis.
Hmm.
My day really consists of doing things like this, going out, going to conferences, meeting with investors.
Evangelizing.
Yeah, exactly, right? Working on the marketing. So pretty much doing everything on, if I think about it like a restaurant verbiage, right? In the back of the house, yeah,
Yeah.
our cooks are the technical folks, Sergio Harini and Clark, and then on the front end of the house, it's myself and now Justin.
Hmm.
And so Justin joined us in April, and it was a strategic decision to bring him into the fold because one of the things I learned as well, Molly, is that I'm only one individual.
Yeah.
And so if I make a decision to go one place, that means I'm sacrificing to not go to another place. I can't be in two places simultaneously, right?
Right.
And so I realized like in order for us to be able to go faster and pick up more steam, I need to have somebody else who's kind of like me, in the sense of, on the business side of the house, not
Hmm.
technical, who has experience in the space, who has connections in the space,
Hmm.
and after a few months of going back and forth with Justin, we decided that it made sense to work together.
Hmm.
That's another big piece of advice. Don't just say, hey, we should work together, and then tomorrow start form a company or work together. Make sure
Right.
you take your time to feel each other out. Again, level set those expectations up front about
Hmm.
everything. Um, and Justin's been such a blessing to us in the fact that we're now able to be in two places simultaneously. I'm in Boston next week for an event. He's in New York, and so we're able to
Hmm.
kind of be um, we're able to be much more expansive and
Yeah.
move
In
faster. So
tandem.
in tandem, right? And
Yeah.
so that's the on a day to day, that's pretty much what it looks like, right? From, at this stage.
I appreciate your details. Most people don't get as detailed as that, and I love it. Like, I think that's actually probably part of your personality, though, right? Because you're in quantitative finance, so it's all about the details. So I love that. That's so great. So
Well,
for
if
all
I'm too
those
detailed,
listening,
you can be like, stop, stop, stop. No one cares.
yeah, no, I actually think it's good. It's like this is really good, like, because I think that's so important. We can always like get high level, but like, how do I actually go and do it, right? Like, what are the steps? How do I structure my day, right? And I think that's so important. And I want to I want to kind of dig in a little bit on your military service and your connections and your network and how you've kind of, I don't want to say leverage because it's not necessarily a happy word, but how have you used that to your benefit, and how would you advise other founders to do the same?
Excellent. I want to kind of shift my answer slightly
Please.
to a slightly different question. Um, I actually live my life by a set of principles. So I mentioned off the air before, but I'm actually an Amazon best-selling author,
Yes.
and I
And a
wrote a
speaker.
book. Yes, and a speaker. Yes. And I recently, well, I wrote a book called The Balance Sheet of Your Life to sum up the core principles of it. So it's my story. I was a kid who grew up with a single mom on food stamps. So, I was not born into luxury and lots of connections and, had every door open to me.
Right.
I was like a majority of American kids. And so the premise of the balance sheet of your life, it's a blueprint, it's a guide. It's a decision-making framework where, we believe that our lives, like events happen, right? We believe that no, like we just showed up here on this podcast,
Right.
right? That this is the event, but there are micro decisions that led up to this event happening, right? You deciding to reach out to me deciding to
Right.
respond to you, right? Like all of these micro decisions led to this. And so, I can drop the link here, or you can paste
Well,
it
I'll
in
put
in
it
the
in I
thing
can
for
put it
the
in the
book
podcast for sure.
because I don't want to get sidetracked and start going
No,
down
no,
this rabbit
no,
hole
I
of the
think it's
premises of the
relevant.
book. But
Yeah, it's
yeah,
important to have it in there for
it's really
sure.
just a decision-making framework, right? A lot of people. So I did this on. I actually gave a. I did a speaking engagement just last week, and I opened it up by saying drive. If I say drive to you, Molly, what's the logical question afterwards?
I mean, drive what?
Drive where, right? Where?
I was thinking, what? Are we driving a Ferrari? Are we driving? What
Yeah,
are we
no, no,
driving?
drive where? Drive where, right? Now, if I say, because Molly, you're in Wyoming, right?
Close.
Okay,
Montana.
yeah,
Yeah.
Montana. That's right. Okay, Montana. Right now, if I say Molly, drive from Montana to New York, you could get there, and you could
Yeah.
take multiple routes to get there. Right? Our lives are the same thing, right? A lot of people are kind of, they don't set a destination for themselves, so it's almost impossible to get there if you don't set the right destination.
Yeah.
Um, and there's four main input areas that each individual has in our lives: the media, what we read, watch, listen to; our associations. Right? Remember, our moms used to say, "To show me your friends, and I'll show you your future."
Yeah. Yeah.
Right? We have our life experiences, and most importantly, we have our self-talk. What do we tell ourselves?
Well, that's really good.
We're good
Yeah.
enough. We're smart enough. We're not. You know, that is really key because your inputs drive the way you think.
Hmm.
The way you think forms your belief system. Your belief system drives your actions. Your
Hmm.
actions become your habits, and your habits drive your results. So
Hmm.
if you want to change anything in your life, you always have to first and foremost start by changing your inputs.
Hmm.
And
That's really
so
well
once
said.
you do that, you can align the different decisions that you have to make every day. And the reason why I called the book the balance sheet of your life is because I define an asset as anything that's pushing you towards your ultimate self. And your
Mm.
ultimate self is the person you're going to become, right? You're basically going to set the inputs of, whether that's like, I want to be an artist in New York City, or I want to be a
Mm.
CEO of a quantitative investment firm.
Right.
I want to be a podcaster. I want to be whatever your ultimate self is. It doesn't matter. It's not about money, status, or
Yeah.
any of that. It's just whatever you want to become. What inputs would that individual need to to become that person, right?
Hmm.
And so, an asset's any decision, anything that pushes you towards that. And a liability is anything that takes you away from that. Because every day when we wake up, we have three types of capital. We have social, emotional, and financial.
Right.
Right? I only have so much social energy on a day. Right? I can only give. It's finite. Right? It's all this capital is finite. I only have so much emotional bandwidth on a day, and obviously I
Right.
only have so much, so many dollars to spend in a day.
Right.
Right?
Can you
So I
say
have to
$1 million
choose.
in a day? I'm
No, I
like,
said
I
only
don't.
a few. Yeah.
Okay, I was like, whew, all right. I mean, our financial capital levels are different.
Yeah, no, 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 no. But I have to choose where and how I invest. And I use that word specifically, invest my social, emotional, and financial capital because they're finite resources. So whatever you invest, whatever you put in, it's either going to push you towards or away from where you're trying to go. And so that's a very high level kind of explanation of the book. But I think it's super relevant to the way I think and the way I
Yeah.
act and behave. Is because I know it sounds so simplistic, but that's really how I look at life. I really look at, okay, is this thing, person, place, or thing, is it pushing me where I'm going or is it taking me
Yeah.
away? Um, and so please forgive me. I don't know if that answered the question
No, I
at
love it.
all,
I mean, I
but
think that that's perfect. We're talking about networks and we're talking about, what does that look like in your past? And I think you spoke to that brilliantly. And I would just say, I think there's also, and maybe it's social capital, but like your time, right? There's only so much of it, it's finite. And so, especially as you think about your network, like how am I sewing into my network? Not that you necessarily get something back, but that it is pushing you further along toward your goal,
yeah.
right? Like at the end of the
So
day. I think,
you really hit it. You really hit it on the head, right? And so you asked about my network, right? How did I even form? I think that's the
right.
thing. People say this all the time. Well, build your network, go form a network. But not all networks are created equally. I could
That's
have a
right.
ton of people in my network, but it's not a network that is providing value, right? There's
Right.
network and there's value of your network.
Yeah.
They're very distinct.
I love that. No, that's well
So,
said.
kind of going back to, again, the way I live my life is understanding who I wanted to become. And
Hmm.
remember my four input areas,
Right.
my associations and my experiences.
Hmm.
You can begin to map out and say, okay, for example, if I want to be a CEO of a quantitative investment firm, all right, who would I want to start maybe hanging out with and what type of experience I would have? Well, maybe I would want to go to financial conferences.
Hmm.
Maybe I would want to go and try to get mentorship from somebody who's already in industry, right? And
Hmm.
up with those types of people, those types of experiences. And guess what happens? I begin to build a network because I'm meeting people, but I'm meeting a network and people that can help me continue to advance,
Yes.
right?
Yeah.
Because otherwise you're meeting people for the sake of meeting people, and that's
Yes.
fantastic, and you should, right? You should always have a good social network. But you got a social network, and actually another point you just triggered for me because I can go off on tangents because I love
No,
to
it's
speak
okay.
honestly, and I'm really passionate about this. I'm
You
really, really
are.
passionate
It's
about all
good.
of this. Not just finance, but the social aspect of it all, right? The human aspect of it, right? Um, and so I like to say when you're relationship building, you're not selling. And when
Yeah.
you're selling, you're not relationship building because it creates confusion. And I
Hmm.
know I know you're listening and saying, well, what is this guy talking about? What do you mean?
No, I agree. If you start with an ask, right? I mean, that's totally off-putting, and that's what selling is. Really, you're asking somebody for something else, right?
I have a slightly different definition of selling.
Okay.
So to me, selling is helping someone get what they want,
Okay.
right? That's my definition of selling. Helping someone being able to not persuade, not
Hmm.
force, but just giving someone information and helping them get what they want. To me, that's selling.
Okay.
Um, and the reason why I say that is because, if you're not in the market for a cell phone, for example, it doesn't matter whatever I tell you about a cell phone, you're not into it. You're not looking for a cell phone. But if you are looking for a cell phone, right, you want a cell phone, you want to get a cell phone,
Hmm.
then I can show you four different phones and then help you choose which one's the right one for you, right? I could sell you that phone based on, different selling factors, right? Things that you're looking for. when you're relationship building, you're trying to build on a human level. So if we're
Hmm.
building on a human level, and then I'm like, "Hey, Molly, buy this cell phone." It's like it feels like, "Whoa, hold on. Wait, what just
Jarring.
happened here? What just happened here?" Right? It feels disingenuous. So I
Hmm.
always say, if you're relationship building, relationship build. Do not sell. Don't talk about your product. Do nothing. If you're selling, don't relationship build. Right? When you're selling, you're
Right.
selling.
So
The other
now's not the
thing,
time to say, "Hey, for 9.99, you can get
right?
insert this into the podcast."
Yeah, exactly. For just 21.95, you
Yeah.
can get my
No,
book.
no.
Right? Yeah, exactly. But no, I think that's a. I mean, um, the other thing, which I think is really important, especially because this is a podcast for entrepreneurs, right?
Right.
Um, Another thing I always start out with whenever I do a speaking engagement, I do a word association, a big map of word
Yes.
association, and I write entrepreneur and salesperson because it's always very interesting to me to see and hear how people see and think about when you hear the word entrepreneur. It's so interesting because a lot of people are like, oh, visionary, bold, all these different words, but then when you get to salesperson, the words are like slimy,
Yeah.
uncomfortable, right? You get like all these different words,
For
and it's
salespeople.
so interesting. And then I tell people like, well, you can't be an entrepreneur if you're not a salesman.
Yes.
You can't be an entrepreneur without being a salesman,
Yeah. I agree. You
right?
have to sell people on your vision. You have to sell your team. You have to sell investors. You have to sell your product and your company. You have to sell it all.
Exactly. But most people don't associate like that. So it's amazing. I love to watch people's reactions when like when I say that piece of it because it's like a light bulb goes off, and it's a complete paradigm shift.
Hmm.
I hear it all the time. People, well, I'm not a salesperson. Absolutely, you are. Right? You have to be. If you're
Yes.
not a salesperson, it means you're never going to sell a product, which means you're never going to make a dollar, which means you're not going to have a company very long.
Right. Right.
Right? You know, Mr. Wonderful said it best. Business is simple. Make more than you spend.
Yep.
Yep.
I like it. I like all. I think these are so good because people make things so complicated. Maybe that's the Ivy League rendition, but like if you do the normal person, like this is what it is. It should be simple because it's
Yeah.
when you overcomplicate, it's when you get into trouble, I think.
Yeah. Yeah. And again, right, I think it all starts with you first and foremost, you have to ensure that what you're building is valuable for someone.
Yes. Yeah.
Um, and before we went and built anything, before we started working on any systems, now
Hmm.
granted, the financial industry is a little bit different than
Hmm.
most industries. And the reason why I say that is because this industry is very black and white. It's kind of one of the reasons why I like it
Right.
so much. Either you perform or you don't, right? It's very kind of
Yeah.
black and white, and the numbers are what the numbers are, right? Your returns
Right.
are what they are. Um, and so you know, in our case, before we went out and we talked to potential clients, some family offices and some other investment banks that we know. And we're like, hey,
Mhm.
we're going to build this type of strategy.
Yeah.
Would you guys find interest in this? And we got an overwhelming yes, because family offices, and as you mentioned, Molly, you guys have some family office clients there. Their objective is really kind of two things: capital preservation for the families they represent and
Hmm.
steady capital growth, right? They diversify out amongst many different investment types from VC, real estate, private
Hmm.
equity, hedge fund, treasuries, whatever, they have a big portfolio because they need to protect and grow steady the assets, right?
Right.
But before we just ran off and started building this trading system, and in our minds it's going to be the best thing ever, we actually stopped and we asked and we got validation that you know, w- there's value that somebody would be willing to pay for before we did it.
Hmm.
And I think that's a really critical thing. And I know a lot of people say it, right? A lot of people talk about it, like,
Right.
make sure you have a customer that's willing to pay for it first. Um,
Yeah.
and it's really true because I've also made the mistake before of,
Mm.
the build it and they will come. Trust me, they don't come.
Yeah, we're not Kevin Costner over here. I am in Montana, but there's no Kevin Costner sightings anywhere over here. That's a
If
Field
you
of
build
Dreams
it,
reference
trust.
for those that don't know.
Oh yeah. If you build it, they will not come.
That's right. That's right. Oh my gosh, that's too good.
And it goes
Well,
and it goes right back to what we just said. It's because
yeah,
if they're not in the market for what you want, for what you have,
right.
they're, it's, but it's human nature, right? We as humans, as an individual, again, kind of overcomplicating it, right? Molly, be like, a lot of people would think it's super complicated. It's not. It's just think about yourself as a consumer,
Hmm.
and your buying patterns and the way your buying behaviors. If you do that, I think it makes it a lot easier to understand how your
Hmm.
prospective customers, make decisions as well.
Right. Well, no, and for the sake of time, we probably have to wrap up. But I really appreciate this conversation. I feel like we could have talked for a lot longer. So maybe we'll have like we'll have a follow up podcast where we dive in a little bit more deep on some of these other things too. But I just want to thank you for your time and kind of end with what are you currently reading? So we know you have an amazing book. We're going to link to that in the comments. But what are you reading right now?
Actually reading a book by a friend of mine, Simon Handy, who's with the UN General Assembly.
Okay.
He wrote a book about the need for reform of the United Nations General Assembly.
Okay.
Very fascinating. Like the actual title is slipping my mind right now. Uh,
Okay. Well, I can get it later and we can drop it into the links
yes,
too so people can find it.
yes. It's a great book.
Okay.
And Mr. Handy's a brilliant, brilliant man who's been with the UN for many, many years. And so his perspective is very interesting.
Fantastic. Well, thank you very much for coming on the podcast, for sharing with our audience. If anybody is interested in reaching out to Ryan, please feel free to do that on LinkedIn and connect with him. And thank you for your time, sir.
I'm pretty easygoing. So people, send me messages. I'm pretty good about accepting everyone. It's probably why
Well,
I
you
have like a
accepted mine,
thousand.
so.
I have like 1,000 people on LinkedIn. I don't even know who they are half the time,
Well,
but
I
you know
feel
what?
honored that you picked mine to respond to then. So thank you.
Yeah. Well, you just never know who you're gonna meet, right? That's what
Yeah.
I love about it.